What's up, you guys? Zoeb here from OneGlassTrader.com, and in this video I'll be sharing with you a powerful pin bar reversal strategy utilizing Walter Peters' concept of room to the left. Now, for those of you who've been following my channel since the very beginning will know that the first ever indicator I ever released was the OGT Price Action Indicator, and it's based on the Walter Peters' book, The Naked Forex, which talks about, pin bars, dojis, Marubozu, all the kind of candlestick patterns that you can think of. And I took all the rules from that book and formed it into the OGT Price Action Indicator. And you can download your version absolutely free. Link is inside the description. All I ask for is that you like this video. And also in the top right hand corner, I will also put to the playlist of the OGT Price Action Indicator, which goes through in a lot more detail all the different candlestick patterns, what the input settings are, and how to trade them. But in this particular video, I'll be focusing on the OGT Price Action Indicator, the pin bar candlestick pattern. Now, what I'm going to do is firstly go through the input settings. Well, let me show you what I've got on this chart at the moment. What I've got on this chart is I've got the OGT Price Action Indicator version 1.3, and I've only got the pin bar setting on, and I'll go into the detail of what my input settings are. I also have the RSI MTF indicator, which you can see by this arrow, and I've also got the MACD, the linear weighted moving average. Again, all these indicators are all in the same link inside the description, inside the members area. So if I go into the input settings of version 1.3, you can see that you have a number of price action candlestick patterns that you can choose from, but the original version only had the pin bar version 1, and again it's exactly the same as version 1 to 1.3. So select that to true. You want to take the MA filter to false. So if you only want to trade candlestick patterns with the long-term trend, you can do that now in this version by setting that to true. But in this case, we're looking for reversal patterns, so therefore it's best to set that off. And what that will do will give you all pin bars that meet your criteria, whether they are with the trend or against the trend. Bars to draw back is default to 1,000. Again, you can set that to more if you want to do some more back testing. And then quantity of previous candles to check range. Now, one of Walter Peters' criteria is that the pin bar that is formed has to be bigger than the previous 4 candles. What I prefer in my kind of back testing and how I like to set my input settings up is set that to 2. So the default in the inputs is 4, but I prefer to have that to 2. And again, the bigger the candle to the previous, the higher probability, but 2 seems to work fine for what I need to use it for. And then this goes into the room to the left, which I'll go into now. So the first one is the percentage of the wick, and again I'll go into this in a second, but I prefer to set this to 10, and the minimum bars ago in terms of where price was at that percentage wick level, I've put 100, which equates to 100 bars to the time frame that you're trading. Now, because I have a number of strategies now that I use, again, they're all spread around on this channel, and I'll put a link to that in one of the playlists, which goes through all the kind of strategies that I've utilized at some point during my kind of trading career. And what I tend to do with this particular strategy is trade this on the weekly, the daily, and the 4-hour. However, I know that a lot of you guys that are on my channel like to trade shorter term time frames and kind of look at things for swing trading. Again, as long as you have the minimum bars ago greater than 100, I feel that that is a big enough time where price has not been in relation to your time frame that you're trading for this strategy to still hold true on lower time frames. So I'm going to go through an example on the USD Euro USD daily and the USD Swiss franc on a 4 hour, because again, those are how I like to trade it. But again, you guys can back test it, visually look at it with these particular settings and see how they get on yeah, at lower time frames. And I'll show you kind of the best way I like to enter. There are a number of ways you can enter pin bar reversals, but I'll show you what I've been using recently and things. Because when I first did this, I used to enter the break of the pin bar, but now I've learnt more patience and look at other factors. I like to wait for price to kind of go into the direction I want to trade before starting to trade it. So we'll go into a couple of examples of that. So again, so I'm just going to zoom in here so you can just see this pin bar. So this is the pin bar here, and what this 728 means is that because this is a bearish pin bar, we're talking about the upper wick. So in the input settings, we put 10% of the wick. So it's looking at the 10% of the upper wick at the top of that price last reached this area of that 10% 728 bars ago. Now we're on a daily chart. Now that basically means that it's pretty much around 2 years ago that price was, you know, between here and then inside this zone, because this I'm guessing that this is around 10%. It could be a bit less than that actually. 10% might be about there. So the last time price was in this range was 2 years ago. Now again, just comprehend how powerful that is, that price has not been in that area for a while. And then if I zoom out, because this indicator basically does all the calculations for you, what Walter Peters refers to as room to the left, as you can see if you're visually doing this when you see a pin bar, that if you look to the left, price has not been there, right? And this is what he means by room to the left. If there's no price action happening to your left, therefore there's a high probability that price will reverse from this pin bar, because the whole nature of a pin bar means that in this particular example, the bulls pushed price up to that zone, and then the bears came in and pushed price all the way down, creating that body in the lower third of the actual bar itself, and therefore giving you that big wick. And that there gives us a high probability that price A wants to reverse, but B also wants to reverse because it hasn't been there in a very long time. So that is an example over there of, in my opinion, of a high probability trade. Now, if this setup occurred and you get something that price has not been there 2 years ago with the pin bar, when do you actually get in? And like I said before, what I used to do before is if the next bar broke below, broke the bar, I would go into a sell. And in this case, you know, if you put your high, if you put your stop loss above there, 160 odd pips, you know, you've comfortably made, you know, nearly you know, at least 1 to 1, 1.5 to 1. Again, your stop would probably be at break even now, which, you know, you would still be in at the moment. So that is one way to kind of trade it. Again, if you're a novice or beginner and you just want a simplified rule from that perspective. The next thing what you can do is actually start overlaying Confluence factors in this, and this is why I've got the RSI MTF indicator. And again, this is saying that price is overbought, oversold on multiple time frames. And again, I'm just looking here that at this level here. And then another version that you can use again is bearish divergence. So we can see over here that price made its high over here. Price made a higher high with the pin bar, but the MACD made a lower high. Again, giving us another strong probability that price wants to reverse or is at an exhaustion point. And again, what I like to use trend lines. And now and breaks of trends. again, it can take you out of getting into moves quicker, but then it does stop you from a lot of bad signals from that perspective. And again, it's quite discretionary in terms of how you would do it. So the way I like to see this is when price breaks out. Again, I like to see a retracement, and again, this bar, this massive wick over here, again, and you see all these other little wicks are giving me high confidence factor that price wants to reject. And then you've also got um, this whole zone over here of resistance over here. And again, now price has now broken through, it has now gone back over here, now touched this resistance, has now become support, and I'm expecting price to start falling again over here. But again, in this situation here, you would have picked up a nice move if you got in around this area here and then follow that move kind of down, having your stop loss above these highs over here. Again, that's one example over there of what you can use. If we look at this 104, so what this is saying is that price was here 104 days ago. Again, you can very easily just draw a trend line across there. Again, breaks the trend line, you're looking for a retest, and then price starts to fall there. Again, in my view, trend lines work really well when you're trying to look at trend reversal, because again, it stops you getting in early for then price to start making those kind of high highs. Because if you got in at the break of this candle here, which was at this point here, price then suddenly reversed, and then you would have got stopped out. But if you would have waited at this point over here, then this would have been a better entry. So again, hopefully you can see that that is high probability setup. So now if we look at the 4-hour USD chef, let's have a look at these three particular examples. Again, we're at a 4-hour chart. This one here, first thing I like to see is there divergence. Just draw that trend line over there. So when this 116 pin bar room to the left is formed, you can see we got a high here and a high. Price, the MACD has made a high, and you expect it to make a high, it's made a lower high. So again, you've got bearish divergence. Again, this for me is a nice signal then to start to go down. And then we've got this 8,702. Basically means that the last 4-hour bar of where the last 10% of this wick was 8,702 bars ago. Again, I'm not going to even bother calculating what that looks like on a day perspective. But again, all I'm doing is just, because again, you wouldn't have seen this bit, you wouldn't have seen any of this bit over here. But again, what are we doing from we're looking for bullish divergence. Again, makes lower lows, and again, you expect the MACD to make lower lows. You've got one low there, and then it's actually the other low is higher. Again, giving us another strong confirmation once this trend line is broken that we are in a good position. Now this one is quite interesting. This is 585, I think that is. If I draw this trend line around there. So when this forms, if we look at firstly the MACD, the last low was here, and then when this is formed, again, we've got no bullish divergence here. But then what do you see here? If we draw this trend line, again, you get the RSI MTF indicator showing you prices overbought, oversold in multiple time frames. And then you get this break of the trend line, and then you get your lower lows and lower high of where you've got bullish MACD divergence of where you're looking for a trade over here. Now you might have made a loss on this, or depending on what your reward to risk is, but again, it then at least then kept you out of getting into this trade really early on where price would have gone completely against you. Now hopefully you guys can see now how powerful these pin bar reversals are when you start including room to the left. And again, the settings that I use, is the percentage of the wick is 10%, and then the minimum number of bars a go, or where price was, is 100. So that's why you always see, you don't see anything below 100 here, because that's what it's set to. And I believe that, if you test this on a 5, 15, 30-minute chart, if you, for the shorter term traders out there, that you guys can also utilize this pricing kind of strategy inside your trading. Again, I use a number of strategies. This is one of them. These are more my higher time frame ones, because I'm still of the opinion that you get more reliable candlestick pattern signals on higher time frames. So that's for, I just keep it on my VPS, just keep the daily, the 4-hour, and the weeklies open on the majors. And then I get an alert on my phone. I don't even bother looking at it until I get an alert on my phone. I don't get involved. Again, I'm not going to retire rich on that particular strategy because they're quite longer term, but you can still make a decent, 5 to 10% a year just by trading that. And the way you get more signals is you're a bit looser with your settings, i.e., the bigger than the previous 4 bars or 2 bars, like I mentioned earlier, or you reduce your minimum number of bars ago, and you might want to do 50 instead of 100. That will give you more signals. Or you can have tighter, more reliable parameters, but you just trade more pairs. So again, there's 2 different ways of where you can get more action depending on what your trading style is. And because these are reversal signals, I like to leave these into the more higher time frame category. So again, if you guys have got any questions, just drop a comment below, drop me an email. You'll have the thumbnails on my other playlists, my other strategies, as well as all the OGT Price Action Indicator kind of videos that I've done. Please like and subscribe, and I shall see you guys in the next video.